target? My target for gold is 8,000 right now, because I think the Dow could potentially hit 8,000. That could potentially be the floor, and potentially a 10-to-1 ratio to silver, at least 15. So this is where we're going to be.
China is planning to do is not just having gold as a passive reserve, but changing its tier one status into an active monetary status so that gold can be physically used to finance trade and finance. Big change.
The global financial system is standing on a knife's edge. Debt markets, equity valuations, and bond yields are all flashing warning signals that point to an inevitable reset. What appears stable on the surface is in fact fragile, propped up by unprecedented central bank intervention and fiscal manipulation. When yields begin to spike uncontrollably, the pressure on equities will be immense, leading to a cascade of selling unlike anything we've seen in modern times. Capital doesn't disappear, it shifts. And history shows that during moments of systemic breakdown, it flows into tangible assets like gold, silver, and increasingly, alternative stores of value such as cryptocurrencies. Gregory Mannarino, widely recognized as the Robin Hood of Wall Street, has long warned of the dangers embedded in the debt bubble and the distortions created by central banks. His perspective, often grounded in trading realities and bond market signals, pairs with the global macroeconomic analysis of SimonHunt, an analyst known for decades of work on monetary metals and international capital flows. Together, they highlight how systemic fragility is not just about market prices but about control, who holds it, who loses it, and what happens when confidence evaporates. The convergence of debt, currency weakness, and central bank experimentation will force a revaluation of tangible assets. A gold price of $8,000, a Dow at 8,000, and a seismic shift into hard money are no longer far-fetched scenarios, but plausible outcomes of current trajectories. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
It's in its infancy. We haven't seen anything yet with regard to the price action of gold, silver, commodities, what's going to end up happening to the currency, the dependency on the currency system. Yeah, I mean, but you know, the price action, it should be exponentially higher from here. I do believe we're still going to par gold. Dow will par at one point, a 1-to-1 ratio. I've been telling people this for over 10 freaking years. We don't know where the bottom of the Dow is. We just know it's completely disconnected from reality. We are going to see, again, the real crash while everyone's staring googly-eyed at the Dow Jones Industrial Average. People who know are studying the yield, the bond yields, 10-year yield more specifically, because it's the benchmark. That's the tell. When we see the bond yields start to spike in an uncontrolled fashion, what is it going to do? The polar opposite of what we're seeing now. It's going to cause massive pressure on equities, on stocks. Going to sell off. Everyone runs to the door at the same time, and not everyone's going to get out at the price they want to. They're going to, again, what do people do? When people panic sell, they're willing to take anything for the assets they're holding, even at substantial losses. You're going to see, again, what's going to happen here. Let's say, for example, in a situation where bond yields start to spike in an uncontrolled fashion, putting massive amounts of pressure on the stock market, you're going to get a lot of sellers at first who are going to put in a market order. A limit order. I am willing to sell asset XYZ, stock XYZ at this price when there are no buyers. They're gonna again they're gonna cancel that order, put in another limit order at a lower price here, and then when there are still no takers, they're going to put in a market order, meaning they're willing to take anything. And of course, the market makers are going to get off on it. That's what they want to see. And then this will turn into a cascade of selling on an epic scale. Yields will spike, stocks will sell off rapidly, not just here in the United States. This will be a worldwide event because the global debt bubble is a monster of epic proportions, of course. And then just, you know, cash doesn't grow little money wings and fly away, as we all know. It just moves from one reality into another. And I believe it's going to go into commodities, going back to gold in its infancy right now. And look, where is the target? My target for gold is 8,000 right now, because I think the Dow could potentially hit 8,000. That could potentially be the floor. So again, before we'll see a wave of buyers come in, there'll be a lot of people trying to catch a falling knife on the way down. They're all going to get wiped out, of course. as it's meant to do, especially the retail investor, not the big ones. The 1% and 2%ers, they'll already be out of the market. You can have banks like Goldman, of course, betting against the market like they did last time. It's going to be no difference here. Trillions and trillions of dollars are going to be made, but people don't realize there's more cash is made in the market when it drops than when it rises, much faster as well. But anyway, so I say we get a Dow 8,000, gold 8,000, and potentially a 10-to-1 ratio to silver. At least 15. So this is where we're going to be. And again, but that's not even the bigger problem. The bigger issue isn't that. The bigger issue that we're all going to face is a credit freeze, a lockup of the system, which was happening in 08. What did they do? They rushed Bernanke in there. Okay, you know what? We need to pump trillions of dollars into the system to free up the credit markets. That's the real issue here. That's why President Trump signed into law in July the stablecoin token, the Genius Act. You can't make it up. It's a backup, and they already know it. I mean, I have to say the most genius thing I've ever seen a politician do in the history of the world was trick his people into believing that we would not have a central bank issue digital currency by, again, the executive order, and then finding a way around it. He knew it was already set up. Privatize the system, but have it run by the Fed. It's a central bank digital currency. And then the stablecoin token being issued by corporations here, they're running the rails, but the Federal Reserve is overseeing the whole thing. It's a central bank digital currency via a mechanism which makes it virtually untouchable, no oversight. At least with the central bank digital currency, in theory, there would be some oversight, but now there's none. I mean, make that up. How many people know what we just said? About that many, about 1% of the population. People are too slow to wake up. Imagine if people woke up when you and I were telling people to do it. I don't know how long you've actually been out here for quite a while, riding the waves, taking advantage of everything that's going on here. It's a golden opportunity across the board, not just with gold, but with if people can understand, this goes beyond the markets, man. This is an opportunity for all of us to come together, to unify, and to realize that we are a revolution. We're part of it. Gold's part of it, of course. Central banks got to go. Trump could end the Fed in 7 seconds. By the time he finished his signature on the gold, putting the Gold Reserve Act of 1934 into law, it's already there. It just needs a signature. We could erase the Federal Reserve, erase it. The president has the ability to revalue gold. That is true value. What would it be? $50, $60, $70, $80,000 an ounce right now in reality, probably based on global debt. I mean, I don't know, some huge number. Back the currency with that, and then we win. Again, we would win. Instead, we're losing, and we're going to continue to lose until someone with guts is put behind the resolute desk. But that would be a choice of the people, not of the puppeteers, honestly. But maybe that's a story we could talk about next time. If right now, let's just say today, the Federal Reserve and the Treasury were not in here, buying it all. Again, what is the goal of every central bank? Is the same: to be the lenders and buyers of last resort. The Fed has fulfilled that goal. Now it's partnered with the U.S. Treasury to rig the markets, rig the debt market. Again, everything becomes a derivative off of that. They could spike in a fashion people aren't going to believe. I believe we could see 50, 100 possibly basis point jumps higher in a day, and that will not stop. Again, why? Everyone runs to the door at the same time. If it were not for this mechanism here, where would real yields be? The twilight zone. That's where they would be. There's no way people would be taking on risk right now in the debt market. First of all, look, man, people are running from it, and we all know that. Anyone that is holding U.S. debt or debt in general, what are they hoping for? They're hoping yields are going to continue to drop, right? Eventually, that mechanism is going to turn around. But it's not going to turn around until they're done buying it all. That's when it's all going to come down. Until they have people, many more people, fully dependent on the system. And then what are they going to do? We're going to end up right now. We're in a crisis situation here. If it were not for the rigging of the debt market, the central banks buying it all, Fed buying it all, Treasury buying it all right now, no business could function like this. An incredible thing. We're absolutely bankrupt, the largest debtor nation in the history of the world. We're broke. Where are we getting all this cash to fund Trump's state capitalism? It's coming right from the Fed. We don't have any of it. Of course, it has to be created out of nothing. And this will, of course, make GDP look really, really good, won't it? Here, as this government spending is calculated as a percent of GDP, can't make that up. Strip that out, we're negative, and we're way negative. But that's how it's going to go. We don't know where bond yields are going to go. Somewhere far beyond the sun, I can tell you that, but past Pluto, and that's going to melt the stock market so fast. Again, but that's the key. People are guessing, and I don't know why they're guessing, because all they got to do is watch the bond markets, watch what's happening to currencies overall. You had mentioned the Dixie early on. Yeah, the Dixie looks great. The dollar looks great compared to the currencies, doesn't it? It's still the prettiest bell at the ball, but it's being decimated. They're all being decimated by the same mechanism. Can't make it up. Cryptocurrencies, for example, like Bitcoin, everyone knows, everyone's familiar with it. We haven't seen anything yet and I know, and I've been telling people this since I told people to stop buying this hand over fist at Bitcoin 17.5. So anyone that got into it with me at 17.5 has ripped the face off of that investment in a way that they're probably never going to see before in history. But I still believe that the crypto space has a lot more to go as alternatives to the dollar are sought out. People's heads are going to spin around like The Exorcist, and it's going to kill the stock markets, and the cash is just going to move from one set of assets into another. And I do believe, again, anything that's backed by gold is going to be benefit from that, quite obviously. I also see a surge of cash initially making its way into cryptocurrencies as well at that time. And then there's going to be a point to reallocate, but we are so far from that. Believe me, I think about this stuff. No one I know of thinks about this more than me. Maybe you do. I don't know how. Eventually, I just can't get away from it. The only time I can forget about what's happening is when I'm racing my car. I have a race car. Is when I'm in it for 8 seconds going down that quarter mile, and I just can't focus on anything except the roar of the engine and shifting gears. But that's really it. Other than that, around the clock, I'm immersed in this. I write about it constantly. I have a backlog of just things I want to get out. I have a newsletter, as you probably know, on Substack. I don't know how many papers I have that are unfinished, probably about, 40. I'm not lying.
Global growth numbers can often be misleading, but a closer look at nominal GDP reveals the underlying truth. With figures near 4%, one economy is outpacing nearly all OECD countries by a wide margin. Driving this expansion is not only fiscal policy, but also a broader strategy tied to currency reform and the role of gold. The plan is not just to hold gold as a passive reserve, but to elevate it to active monetary status, capable of financing trade and investment directly. That would represent a historic shift in the global financial system. Copper production projects alone could see output more than triple over the next decade, strengthening industrial capacity and deepening long-term alliances. This approach highlights a form of economic warfare, one conducted through capital, infrastructure, and trade, rather than direct military confrontation, though the military capability is clearly present as a defensive measure. Debt continues to outpace GDP, and central banks intervene whenever markets stumble. Let's get back to the interview.
They've held their hand on fiscal stimulus, waiting to see how the tariff negotiations develop. So my sense is that real GDP will grow by 5.2% this year. Our better guide to what the economy is really doing is nominal GDP, which will come in at 4%. That's more than double most of the OECD countries. And then when you look at what China, as I mentioned earlier, is planning to do on, one, its own currency, and two, that of the BRICS, the day will come when China will announce that its currency is supported by the gold that it owns, which in the private sector is 25,000 tons plus, and in the state sector, the same amount. The second thing that China is planning to do is not just having gold as a passive reserve, but changing its tier 1 status into an active monetary status so that gold can be physically used to finance trade and finance. Big, big change. I don't think throughout history China has been an aggressor until somebody attacks them. I mean, they have had a history of being invaded, but they are fully supporting their strategic ally, Russia, in the war against NATO. And they have made it very clear publicly that they are behind Iran. They've made huge investments in Iran, the energy sector, manufacturing. There's a 25-year agreement between the two countries to develop Iran's manufacturing sector. They are developing Iran's huge copper resource, the Sarchesmi mine. They put capital in so that, from memory speaking, production will rise from the current circa 300,000 tons to 1 million tons in 2030, 2035. So effectively, China's war, as you might call it, is through trade and investment, not through bullets and missiles. Though that said, as was evident from the military parade, that they have the military assets to defend themselves and, if necessary, to attack aggressors. The two big problems facing the world: one, debt is growing faster than GDP, and two, every time an economy or financial markets get into trouble, central banks bail them out. The time has come when that should be stopped. Now, I suspect that Powell, being the lead central banker in the world, that Carstens, the then general manager of the BIS, talked to him about what he was going to say. So I suspect Powell is trying to replicate what Carstens was advising. It's time to stop central banks having that put. The question is, will he succeed or will Trump succeed?
As we step back and look at the bigger picture, one theme becomes impossible to ignore. The global financial order is shifting in ways that most investors are not yet prepared for. Debt levels are compounding faster than productive growth. Central banks continue to act as the ultimate safety net, and trade alliances are being redrawn through capital flows and resource investment rather than traditional diplomacy. This quiet restructuring of the system is not happening in headlines, but through deliberate, long-term strategies that favor tangible assets, hard money, and infrastructure over paper promises. Gold, commodities, and strategic trade are increasingly defining the path forward, and ignoring these signals could prove costly in the years ahead. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.